Stocks are continuing their weeks-long tepidness as concerns over rising bond yields escalate among domestic central bank officials, hitting high multiple tech stocks the most as investors plow into less risky assets. Yields have been climbing globally all morning, and this has caused U.S. equity futures to surrender all their earlier gains, Vital Knowledge Media founder Adam Crisafulli said Wednesday before the open. He continues to think the S&P's valuation expansion is over, but that the index should be able to tolerate 10-year Treasury yields of up to 1.75%. Rather than sell off across the board, the S&P is likely to continue moving sideways with rates at present levels as investors rotate out of high multiple growth and reopening stocks into cyclical and value stocks. In a Wednesday CNN Business exclusive, former New York Fed President Bill Dudley said Fed officials want the economy to overheat, before saying that Treasury yields could climb as high as 4%, something that would surely prove competitive for stocks. The Fed has basically changed its regime from one where they would try to arrive on time, to one where they're now going to arrive late, Dudley said. Markets have gotten a taste of yield-induced panic in recent weeks, with the Dow plunging as much as 1,000 points in late February amid the surge. Federal Reserve Governor Lael Brainerd on Tuesday became one of the first U.S. central bankers to express concerns over rising yields, saying at a conference that the recent boom has caught her eye. It's likely the Fed will be pressured to raise historically low interest rates in order to contain yields if they continue to grow, but experts have warned that any such hawkishness could tank stocks. The difficulty today is that we have the most interest rate-sensitive stock market in Wall Street history, Jim Stack, the president of Whitefish, Montana's Investec Research told Forbes in February. As alluded to by Crisafulli, rising rates would compress earnings-based valuations and could hit tech stocks particularly hard given their sky-high prices. Amazon, for example, trades at about 75 times forward-looking earnings, while the broader S&P trades at about 39 times earnings. Domestic markets severely lagged their global counterparts. Hong Kong's Hang Seng Index jumped 2.7% Wednesday, while Japan's Nikkei 225 climbed 0.5%. The United Kingdom's FTSE 100 is up 0.4%. Is the stock market about to crash? Forbes stands to leave Las Vegas as it agrees to sell Strip assets for $6.25 billion, Forbes.